All right. Good morning, everybody. So today is the day we waited for all week. It's the title of today's morning briefing. Non-farm payrolls. One of the reasons that I've been waiting for it all week is we have the potential for a gap close. And I love these liquidity gap close plays. But we've also been waiting for it because it's very often a, a bias altering event. And we are ready for that, right? So first, take a look at what's going on around the world. We need to make sure that while we were asleep, alliances didn't change or some news didn't come out that might stick around. The goal here is not to go through a bunch of different headlines and read a bunch of stories. You're looking for anything that really stands out. That an example that I'll use would be when that ship got stuck in the canal, right? And it screwed up supply chains for a lot of major companies. Um, that wasn't just a one-off one-day story, right? It lasted for a couple of days. It had long-lasting effects on the market. And that's the kind of stories that you're looking for in the morning. Most of the time, you're not going to find one of those stories, right? Could you imagine that kind of chaos every single day? Who needs it, right? So from that point of view, most of the time you'll come up empty and then you just catch the headlines, make sure there's nothing else going on of major importance, and good to go. So I'm using investing.com. I am logged in, but I don't have, like a pro account or anything like that. So if you're wanting to access this, you don't need, to get an account or buy anything. I think you could even do it without logging in, I think, right? You could just like show up to the website and do it. But either way, sort them so that we got a better idea of the max upside and the max downside. A couple of ones that I tend to focus on, and they all are very likely to be valuable and, just trying to be inclusive, but Hong Kong and Japan, Europe, and then our markets is pretty much all I'm looking at, right? I mean, the rest, they get participation trophies or something. So we've been keeping our eye on Hong Kong, looking to validate that stimulus. Last week, these guys were up 2-3% every day, day after day. And we've seen that through the ADRs, and now we don't, right? All this week it's been negative, not drastically heavily negative. They're certainly keeping their gains that they made, but it has been down all week and continues to be down today. If you're new to doing this, you would probably need the chart, right? We'd want to go and look at the chart and see the candles and have an idea of what's happened in the past. You start doing this every day, you kind of get a feel for it. Just try to remember what we had yesterday. Take notes. If that doesn't work for you, then use the chart, right? But it's been down all week. I don't need the chart for that. You can also just catch the replays, right? These morning briefings are on YouTube, so you can always go back. Our markets are up slightly, but really non-farm payrolls is one of the reasons that we really haven't gone anywhere all week. And so even while we're up slightly a little bit this morning, there's no expectation that we're breaking out and running or that we're going anywhere until we get this data point. You can see non-farm payrolls is highlighted in hot, right? So you got mild, medium, and hot, or small, medium, large. Uh, you do you, right? Whatever way you want to say it. It is highly impactful anticipation. I do believe that there's going to be some markets closed on Monday, not our market, but some global markets. You can go to a website called tradinghours.com. It's free to use, and you can look at markets open and close around the world. It'll tell you their local time zone, so you can set your Thinkorswim charts to their time. And it'll tell you if their markets are going to be closed for holidays, for government services, or whatever. It's a great website. It's free. I would check for Monday and make sure that the markets we expect to have open are actually going to be open. Some of the news that came out from Amazon was a boost to the market itself, by the way. Amazon is closely monitored for spending, right? How consumers are spending, how the users, and they use that as a little bit of a gauge for, liquidity in the US. How much money's in your pocket? If you're really struggling, you're not, doing frivolous spending on Amazon. Everything that they came out with on their earnings kind of validated what a lot of analysts have been saying, that we're not going back to the lows. The bear market is over. We're not even going to get into a recession. Forget soft landing. This airplane isn't touching down, and we're just going to continue to head to the upside. And if you haven't heard that yet, I'm shocked, and probably want to revisit whatever you've been doing to monitor how the US markets are doing, right? If you had any hopes of revisiting those lows and a continuation of the bear market move, no, we're done with all of that, right? It's back to business as usual at this point. And it's been that way for a while, by the way. So yay, now you're just caught up with the rest of us. All right, so I think they did a really good job, right? If this week was a hurry up and wait on non-farm payrolls, this is the first hurry up and wait week where we actually gave some back, right? If you guys remember how it's been for FOMC week, CPI week, we just kept grinding higher, right? We just kept grinding higher, and it sucked because we were already at the highs and the risk is to the upside at that point. And so, you didn't really want to participate in the grind higher while waiting on FOMC junk. This week, we had that nice down move, right? We've actually been going somewhere, which is good. So we were a little closer to the 10 now than when we ended the week last week. We're still holding above that 50% line in the sand that is valuable to us at this point. And we're ready. We're ready for non-farm payrolls. Two ways this can go. One, they were so worried about Apple missing. Oh my gosh, Apple's going to knock the market over. I mean, hey, don't get me wrong. It's got the weight and the power to do that, but that was a nothing burger. Okay, so Apple, no, that's not the problem. We're good, right? We're good to go. We just got to get these non-farm payroll numbers out of the way. And when it comes to that, we could see one of my favorite trades. So We're just going to add some days to this chart so we can go back and look at some opens. It's going to take a moment for Thinkorswim to continue working. If you use Thinkorswim often, you'll know what's going on here. It's trying to add all of those days onto the chart. And in the lower portion, you can see that bar getting a little smaller and a little smaller and a little smaller. We'll know when it's done when it quits twitching. And if I try to scroll through the charts right now, while it's still doing that, then I'll just make it do that even longer. So might as well just wait. All right, and then to easily check what day you're on when you go crawling through the charts like we're about to do, is to just keep your eyes up in this area as you move your mouse. That way you're not trying to like count the days or anything like that. You can just drag your mouse along, pop up, see what day it is. That's June 7, April 20. We're getting kind of close there. April 12, and that'll do. All right, so April 12, economic event day. I am on a 15-minute because I thought I needed to go back farther than what I did go back. So this would have been better on a 5-minute, but simple. 8:30, the report's going to come out. We can get a red candle or a green candle. I don't care which way, right? But we need one single driving candle. So we don't want each side to have wicks. We want a single direction. And if there's any wick, we need it to be in the direction of the run, right? So we wouldn't have wanted it to go down, leave this big wick, and then run all the way up and then close up here. That's not what we want. This is a gap. And I know that you don't see a gap, right? You see candles. I don't get it, man. Where's the gap? It's a liquidity gap. We're going to swap that to a 5 so we can see it better. So in this liquidity gap, once we've made the initial drive, we're going to go back and close that gap. And a lot of times it's going to be, you know, like hours to get the gap closed. And this isn't a one-off, you know, like, oh, yeah, you know, he had one example where it did that. I can show you this year with CPI, PPI, and non-farm payrolls that we've had out of the 8 months now, well, full months, 7 full months, that out of those, one of the 3 events each month has provided at least one gap close, right? So that's one gap close a month at least, because there's 3 events each month. That's not bad when you consider the kind of drive that this one setup offers, right? And then even besides that, not just the setup itself, but the opportunity after the setup. So, you know, I'm going to show you what the wrong ones look like today. We need to distinguish when we do want to do it and when we don't, and what the good ones look like from the bad ones. So here we are, we're back to the 12th. We're on a 5-minute chart now, so it makes it a little cleaner and a little easier to understand. The 8:30 report comes out, no big tail wick in the other direction. We went up, closed near the very high of that bar, and that entire thing is the gap. And then we spend the rest of the morning working our way back down to that gap. Oddly enough, and this is more newer data than anything else, is this little zone right there is equal parts, and the overshoot is equal to that every time. So far, it's been like very consistent. So you'll get that near miss, like a double bottom near miss where they front run it. Then you'll get that measurement right there. And when we do break through, you get the same measurement on the other side, right? Reciprocation. And if you've gone through my stuff, you know I'm kind of big on reciprocation. So that little extra bit is like, whatever, we'll play it just because. But the real game is getting that gap closed. It doesn't have to be a bullish move. It can go down as long as it's a good, clean drive in a single direction. And then we spend the rest of the time getting that gap closed. So this is what a good one looks like. Now we're going to go look at one that is not so good. If I have enough data there, I think so. It figures, doesn't it? Just a few more days. All right, let's use the 7th. Now the 7th was the one on a weekend. So we were actually closed and the non-farm came out with anyways, or at least it was non-farm, could have been CPI. So let's try May 10. Well, that was about a dud. That's April 10th. Duh. Okay, so that was another good one. Notice it kept going. So I guess we're just going to get another example of a good one first. The report came out at 8:30, single drive, continued to move, right? Higher and higher and higher. I had a lot of people mad that day and said, I tried to go short as soon as that first candle closed. Come on, I never said that. One, this is the gap close, right? But when I said that back there, that this is the gap close, that was all there was, is that one candle. This is the gap close. Wherever it stops going up and builds a base, that's where the end is. So it's not just one single candle and then, oh, let's short this thing and run it all the way back down. And second, it's not going to be a straight line and it's going to take some time. It took hours, right? That's 8:30. It didn't get back down here until 11 o'clock. So relax, take your time. You're not going to miss it. It needs to quit going up. In this case, if it was going down, it would need to quit going down. It needs to prove that, right? So don't take it as soon as the first candle closes because it might not be done yet. Notice the difference between this candle and the other one that we looked at in the first example. The first one closed at the highest point of the candle. There was just a little bit of wick left, not too much. This one actually pulled back. It was higher than 50%. So, that wasn't the problem, but it meant that the next candle actually stayed inside. It was still struggling to get out. And then the third candle finally continued that drive forward, right? And it was in that time frame that I heard from a number of people who said, well, I tried to short it there and it didn't work. Patience, grasshopper. So this is another good one. It needs to present in a way that has finally convinced you that it's going to quit going up. One of the things that you could do to make that determination is measure the big bars and look for 50%. So where was the last big bar? It was right there. Once it started topping out up here, you can just mark that 50%. If it's still above that, then you don't have a short, right? That's pretty easy. Once it started to build enough base, you could just say, well, as long as it's still sitting in this base, there's no short needed to get out. And if you wanted to get frisky, you would just sell it across the highs for an LRE. So we're going to keep looking for one that didn't work because I do really want to make sure you guys know what one of those look like. All right, well, May 5, 8:30 data. That was, I guess, a dud. So there's one of those. We got the data. It must have been spot on perfect, right in line with the estimates. And we really didn't get anything. And the market just pretty much just kept on going. So this is absolutely a perfect example that it doesn't owe us a big move, right? It doesn't owe us a gap close play at all. So there's just an example of where we didn't really get anything. I think June 13th was another dud, so I'm gonna head that way. There it is. Okay, this is a good example of what you do not want today, right? If we're looking for this gap close play, 8:30 data, and it goes in both directions, that's not what you want, right? If that's what we get, forget it. Just set the whole thing aside, get some coffee and cookies, and just forget it, right? Because this is not what we want. It's not the droid you're looking for. So I've shown you two really good examples of what we do want. One example of where we just kind of didn't see any reaction out of the data at all. And then this one. This one trade is such an easy trade. And I don't like using the word easy in trading. But this is an easy trade with a high conviction, high success, and not just getting the trade and running it back down again, right? It's knowing, having the bias that we're going to go back to the open. So if that means we're going to short the highs, that you would know you could continue to try to take shorts, even if you were only getting a point and a half, and you got your stopped out and you had to try again and you got another point and a half and you got stopped, whatever. You still have a bias that, yeah, I can still short this. We're still going to go down. I can find another short entry to take another short trade, knowing you're just trying to get that gap closed, right? So I'm not saying that it's got to be this entry in and all the way down and then you get out. I mean, that's pretty awesome, but that's not the goal, right? Or at least that's not a realistic goal. All right, so on to the regular programming. Get back to normal here. I do love those gap close plays. We've got a market maker move showing they're a little nervous about the numbers coming in, so they're beginning to hedge. The volume is actually normal today. We've been high over the last few days. And so while in comparison, this feels a little light, I really think it's kind of heavy for a non-farm payrolls day. Normally we'd be looking at like the 70s or the 80s, but the participation has been so high this week that even looking at 105 feels kind of light. You can see the two other days that I'm referring to, right? Wednesday and Thursday. So we've got this kind of a ugly little micro double bottom at the moment. It doesn't even matter what pattern we have at this point. It's all going to matter how the numbers come out. And I didn't get a chance to listen to the news that I would normally listen to on a day like this. I like listening for their confidence and their conviction. And I got to say, the more cocky they are, the more confident they are and arrogant about what they think they know, when they know that, oh, we know what the numbers are going to be. No, you don't know what the numbers are going to be. And if they're that cocky and arrogant and just that sure, I start looking for a miss. And when it misses, and oh boy, you know, it happens more often than you think, when the consensus estimate is wrong and they don't have the numbers like they thought they had, that's when we get the biggest moves, right? Those are where the best surprises come in the market. The market doesn't like surprises. We still, I would say we're losing our classic shape, right? We don't quite have a B yet, but if we spend just a little bit more time down here, we're going to get that lower half, and then we will have the classic B. When we're at the highs, we expect to go to the lows. When we're at the lows, we expect to go to the highs. Hey, we're at the lows. Still building a basing pattern. At some point, if a flag does not follow through as a flag, it's not a flag anymore, right? So you got the nice pull here, and then either a flag or a pennant, either way. My failed bear flag would be isolating that as a range, marking out 50%, plotting that up, looking for a breakout, and having a failed flag play, which eventually gives you a big cup and then a handle, which leads into a new flag and bullish continuation. And you could get like an inverse head and shoulders down here first. I won't argue that the pattern was already forming earlier. It just didn't materialize. One of the things about patterns is the uglier they are, the less likely they're going to follow through, right? So it can be just dog ugly and still work, but it's less likely to work, especially if it's hard to recognize as the pattern that you seek. We don't have a point of control to carry forward from yesterday. That's already done. We do have the VPOC overhead at 46.03, and we've got one below us at 44.55. I'll just remind today that those are not support and resistance levels, right? And we close inside the box 80% of the time, right? That's our statistical average when it comes to the S&P. And this is the box. So can we close outside the box today? Yes, absolutely. I'm not saying that you can't close outside the box, but 8 out of 10 times, 8 out of 10 weeks, we will close inside the box when we're on our game, right? So, statistically, we're going to be back in that box. And I'm a nerd. I like statistics. All right. So what we want to focus on is after we get non-farm payroll and it does that move, then what? Well, an upward push at the very least, we'll just kind of take some of this stuff off, right? We're underneath the daily pivot point. That's not really going to be too drastic, but we were also underneath the weekly pivot point, and we're still bearish as long as we're underneath it. We got to get back to it. Even driving towards it, we still have to say, we're weak. We're underneath the weekly pivot, but it's improving. And with the market maker move and the ADR combined, you got about a 80. I'm going to give a little and say about 80 points. But on a day like this, we could easily double that number. So if I don't double the number and I just look at the ADR, that's the yellow line, 45.64 to the upside and 44.82 to the downside. But now we want to add that number to it, right? Another $25 or 0.55%. So the easiest way to do that is just to start at the yellow line, and don't nerd out and try to get this scientifically perfect, right? You're trying to add another $25, ballpark it. There's 25-ish, right about there, right? So at that point, what I like to do is once I've got a high set like that and I can look back, I want to look back. Anything that I need to be concerned of? Yeah, Wednesday's high. Wednesday's high is like 45.93, and we're looking at 45.89. If we get that close, we're going to go ahead and go to it, right? What stands out even more is that gap. That didn't work. $45.98.25. If we get that close, we're going to close that gap. And now, isn't that nice to know, right? If we start running, we get above that voodoo line, 45.78, forget about it. We're closing that gap. today, if we get that kind of move, right? So it doesn't have to stop at the yellow line, 45.64. And if you're thinking maybe I'm reaching a little bit, the numbers tell me I haven't even begun to reach, right? I'm being really conservative in my estimate here. The ADR is $40. The market maker move is $25. So that's $65. And I only measured 25 off of this, right? 'Cause all I gave is that little bit, that $25. With a $65 combo, and then we double that, right? You're looking at $130 in a single direction. So I'm not reaching even a little. To the downside, we can just take the same line, right? We don't even need to draw another one, or if you want, you just duplicate it. Puts us right into these voodoo lines. The green ones are called forest, I think. But to get to it, we'd have to get through the purple one, which is another voodoo line. I don't remember what the purple ones are called. They got too many funny names. Either way, it's a pretty strong one. The only one stronger than that purple is the white voodoo line up there. That's it. So, you know, it's one of the big ones. So if we can get through that level, 44.50 would not be off the table. But there's really nothing down here that we can aim for as any sort of a gravity point, you know, no old gap to close kind of thing until you get to like 4,300. And we ain't going there, not today. 44.59 is the 10-week. So wouldn't surprise, you know, could we go that? Oh yeah, easy, right? 44.59 is also the voodoo line. So it's right where we're talking about. Notice how my measurement lines us right up with a moving average. It's just a coincidence, right? Yeah, yeah. So why did I spend all this time going through all of this? Well, because there's no reason to look at any equity stuff until we get the numbers, right? Because it won't matter. If the numbers come out shock and awe and we head to the upside, then we're going to see more of the short covering rally, dash for trash, bottom fishing stuff moving that we've been seeing, right? So that'll be like same old, same old. And then on the other side of that, if it's a surprise to the downside, then we're just going to continue to sell off more, and the everything that I just named will go down less, right? The dash for trash rotation, fractal rotation out of this mega cap rally that we've had. So this morning, I mean, it doesn't hurt to look. The FANGs are up the most, 1%, with pot behind it, and then the EV market. And what's down the most is crypto, cyber, and the China ADRs. So something's got to give, right? That's a good question. Honestly, I didn't mention there are some cog lines. So I don't have them marked, oddly, but the cog lines are 32 and 11. So 44.32 and 45.11, excuse me, I said 44. 45.31, 32, and 45.11. And then if you go up, you'll have, you know, 46.11, 46.32. Yeah, they just repeat like a cycle, right? Now, those are not yet 100% validated. I'm taking it on faith that they are going to be cogs, even though I might not have the data yet to prove that they are a cog, because all the others were cogs from 37 all the way up, right? We're talking like 3,600 in the ES all the way up to where we are today. Every one of them along the way, and the 100 handle has been a cog line. So I don't have the data to validate 44, 45, and 46 yet, because I've been busy. but I'm going to assume since all the others were that these are too. Guilty until proven otherwise is the way I'm going to look at it. Wanted to share this with you guys yesterday. This was the alert for my call to for support yesterday, that we were turning around and we're headed to the upside. That green line breakaway from the group right there. And when the others didn't follow, I got a little concerned, but if you look at the confirmation through the XLF that we had, even though it wasn't much of a surprise that tech was letting us down, everybody was waiting on Apple. Finance didn't wait around though. So we had one of the major sectors, we had the green line breakover. And we had that nice reversal off of the lows yesterday. And again, it's not like, we catch it from the very bottom and run it to the very top. But when your bias now is bullish and that you've got this expectation that it's just going to continue to go up, once you get one of your trades done, whether you made, 2 points or 20, you can reload and take another trade. No PDT, right? Just get another one. You get another one and get another one, because you can continue to stay bullish until the bullish signals are done, or we no longer have that bullish bias. You can see the crossover in the weighted AD yesterday, which tied in with that green line crossover. And then the ticks went up into the green and mostly stayed there, mostly, right? Through that whole run all the way to the top, all the way to that cluster. Easy way to kind of visually see, are we spending more time in the red or in the green, is just to do that. Hide the side that you're trying to gauge and look at, well, how much time are we staying in the green? Notice before the crossover, we weren't really in the green, right? There isn't anything there. Then we had the crossover on the green line. We had the ADR, or the weighted AD crossover, and we had the ticks cross up into the green, and we mostly stayed in the green through that run. I kept looking for a +8 and we didn't get it, and so that was like one check mark off of that run that we had up, is that we really just never got even an 8, or even better, 1,000, right? Get a 10 or an 8, I'd have felt better, but I wasn't that salty anyways, because that was a heck of a play. So crossover on the cyan line, it kept holding on the lower end of these Schwab bars, and I don't like when it does that. I like when it's, leading or right up into the upper edge. And the weighted AD is better above 5. So we'd have had more conviction or confidence that this breakout was, or that this was going to break out and continue to go, because that was all inside, right? That was all inside Globex. But for a breakout at Globex and a continuation, we'd have wanted this above 5, right? We would have wanted it to really show us the dominance, and it wasn't there. So kind of already had the idea that it wasn't going to reclaim levels from Wednesday, but still couldn't say if it was going to stop, at this Globex level, or if we were going to make it all the way to the top. Couldn't say. Just staying underneath that 5 told us we weren't going to continue to go. We weren't getting that gap closed yesterday, is a good way to say it, right? It wasn't that good. So that's what I got, guys. You got about 20 minutes before non-farm payrolls. And then it's the weekend, right? Be careful, be safe. And I will see you all Monday.